Hi everyone, hope you're all doing well, and today we're going to talk about 10x return stocks. So I'm going to talk about a stock that I potentially own that I feel like in the next few years will be a stock that I get a 10x return on. But in general, we're going to do a talk about 10x returns as well. So there's going to be a stock that I own, and in general, a bit of an education video talking about 10x return stocks because they are really important. If you do want to make some good money in the stock market, one of the things that does really help you achieve that is by having one stock that does absolutely amazing. You can have a lot of stinker stocks, you can have a lot of stocks that just go up slightly, but having that one stock that absolutely performs amazing is the key really to outperforming the stock market in general. So we're going to take a look at this. Now, one thing I do see happening quite a bit right now is it is thrown around on YouTube that, oh, this stock I'm buying is the next 10x return, only for people to sell it out in 1 year's time for a bit of a loss. So this is the thing you do have to be careful of. There's a lot of people that do hype up these 10x return stocks. You'd think every stock's going to 10x with the amount of times you see it featured on YouTube thumbnails. But yeah, just be very careful because a lot of people do claim this to be a 10x return stock on YouTube and it doesn't turn out to be that. So you have to be really careful about that. I see it around on YouTube. It is a lot harder than what people make out to get a 10x return stock on YouTube. So that's something to be very careful of. And the next thing is that it will take a long time. It will take probably a good 5 to probably 10 years to have that potential to have a 10x return stock. You will need a lot of years for the stock market to go up. You will need the next kind of 5-10 years for this stock to perform and also bring them financials in. It will need to do them financials over the next 5-10 years for it to have that share price performance. So when you are looking at a 10x return stock, it is generally nothing that you can do in the short term. It'd be very rare that you do it in a 12 months period. The only way to basically get a 10x return stock in a 12 months period would be to be basically gambling on a lot of penny stocks or any stock that's about to go bankrupt and it makes it through. To get a 10x return stock in the 12 months, you could do it, but you're more than likely gambling. Whereas for me and most of you guys in here as long-term investors, we want to kind of do that with the odds in our favour, trying to play it the more safer way where we get them sort of returns. So it will, when you are looking for a 10x stock, you need to put the long time frame in your mindset for the next kind of 5-10 years to get them returns as the financials improve over a long period of time. And this is the big thing, is like people forget that in the stock market you don't really need to have loads of stocks that do absolutely amazing. You don't need to invest in every stock and you look at every stock and go, oh, this needs to do absolutely amazing. The benefits of having one stock that performs amazing will just lift your whole portfolio up, and people forget that sometimes. And I learned this from One Up in Wall Street by Peter Lynch. Now, the big thing I learned from Peter Lynch in that book, one of the big things that I learned, it's a fantastic book, but one of them is that you only really need 6 stocks out of 10 to do good, and you do quite well in the stock market. If you have 7 out of 10 stocks that do really good, you do amazing in the stock market. And the other big thing is that if you have one stock that obviously does a 10x return, you easily outperform the market. And that's the big thing is looking for that one stock that outperforms the stock market or brings in a 10x return, and you do absolutely amazing. So this is page 34 from One Up on Wall Street, and you can see here there is a portfolio. There is a portfolio of A, which has Bethlehem Steel, Coca-Cola, General Motors, W.R. Grace, Kellogg's, Hanover, Merrick, Owen Corning, Phillips Dodge, Schulenberger, and Stop and Shop. And you can see here the returns of it, and that is portfolio A, and you can see here portfolio B, all of the above plus Shop and Stop. And you can see the returns here on the far right hand side, and on the right you'll see Shop and Stop has 900% return. And Peter Lynch goes on to say that the first stock I ever bought, Flying Tiger Airlines, turned out to be a multi-bagger that put me through graduate school in the last decade. The occasional 5 and 10 baggers and the rarer 20 bagger has helped my fund outgain the competition, and I own 1,400 stocks. In a small portfolio, even one of these remarkable performers can transform a lost cause into a profitable one. So what I was saying earlier, you can have a stinker of a portfolio, but if you have one amazing stock, it can lift everything up. So if you have portfolio of stocks that do pretty good, and then you also have one amazing stock, then you really do outperform the market. It's amazing how this works. The effect is most striking in weak stock markets. Yes, there are 10 baggers in weak markets, so when stocks are going down, you can still get them. And the big thing is when stocks are going down, those are the best opportunities to be buying them 10 baggers where they sell off. You get them at cheaper valuations. Let's go back to 1980, 2 years before the dawn of the great bull market. Suppose you invested 10,000 in the following 10 stocks on December 22nd, 1980. So that's the first 10 stocks that I showed you without Stop and Shop, and held them until October the 4th, 1983. That's strategy A. Strategy B is the same, except that you added an 11th stock, Stop and Shop, which turned out to be the 10 bagger. The result from strategy A is that your 10,000 would have increased to $13,040 for a mediocre 30% return total over the nearly 3 years. The S&P 500 offered a total return of 40.6% in the same period. You'd have a perfect right to look at this and say, big deal, why don't I leave the investing to the pros? But if you added Stop and Shop, your 10,000 would have more than doubled to 21,000, giving you a total return of 110.6% and a chance to brag on Wall Street. Furthermore, if you had added to your position in Stop and Shop as you saw the company prospects improving, your overall return might have been twice again as high. To make this spectacular showing, you only have to find one big winner out of 11. The more right you are about any one stock, the more wrong you can be on all the others and still triumph as an investor. So that's one of my favourite bits from One Up on Wall Street. It shows you that you can have a stock market portfolio that doesn't do well, but you only need that one stock. Or even better, if you have all your stocks still do pretty good, bringing some good returns, and then you have that one stock that does absolutely amazing, you really do outperform the stock market. And that's what we're all trying to do. This is what I try and do. I buy stocks that potentially I see 100% return on, and some of them stocks that I'm buying that could potentially bring me 100% return on, one of them, if all I need them to do is be a 5 bagger or potentially a 10 bagger, and my whole portfolio does absolutely amazing. And that's a big thing, trying to find this one stock that can lift your whole portfolio can make a big massive difference. And these stocks as well, they don't need to be absolutely crazy stocks. These stocks that do 10x returns can be still very big market cap companies that you know about as well. That's the big thing to remember. Now, I've had some very successful investments previously, but there's one standout stock in my portfolio at the moment, which is my 10x return. There's a few more that I'm buying at the moment that I think could be the next ones further down the line, but this is the one potentially for me that I feel like could lift my whole portfolio up for the next kind of 2, 3, 4 years basically. And this is an investment that I made about a year and a half ago, and this was in a company called InMode. Now at the moment InMode is performing amazing because I bought the stock when it went down, and obviously that puts me in a better position. But then because the valuation was cheap and the financials have been amazing, this for me is a company that I'm already up 320% on in 1 year and 6 months. And this was my largest position when I started buying this as well. So this is one stock that is helping me outperform the stock market portfolio and lifting my whole portfolio up at the moment. Now, like I said, for me, this is the stock that I look at in my current portfolio that will potentially be my 10x return at the moment. Obviously, it's done amazing, but I still think it has a lot more upside from where it goes from here. So InMode at the moment is currently a P ratio of 40. It's currently trading at a forward P ratio of 32. Now, this company, from my point of view, this is still a cheap valuation. The company what InMode is, with a clean balance sheet, with profit margins of 45%, major amounts of profit, revenue growth growing a huge amount. I think the revenue growth this year is going to grow somewhere around 60%. Yep, sorry, I've actually written it down, 68% revenue growth. So you have a company with 68% revenue growth, massive amounts of profit, clean balance sheet, massive industry that it's in, and it's trading down at a P ratio of 40 and a forward P ratio of 32. Now for me, these sort of companies could easily, you could be talking, 60 for this sort of company. So for me, this company is already still undervalued right now. Now over the next kind of few years, I think this company is going to grow at a huge rate. Now analysts at the moment are only predicting 22% revenue growth on this company. Now this company, like I said, just grew 68%. I think InMode will more than likely sandbag their guidance, and then what they'll do is what they've done historically, which is then they kind of every quarter update their outlook. I do expect the revenue growth to probably be above 30% next year. So from my point of view, the analysts have these expectations very low down, and I think they will beat them. I can't see a company going from 68% revenue growth down to 22% revenue growth. But as always, when I do my calculations, I want to put the worst case scenario out for you guys out there. So what I've done is I've done 20% revenue growth. Now, like I said, I expect this to be a lot higher than this, but I've sandbagged it. I've not gone from crazy numbers. Worst case scenario, let's say this company grows at 20% revenue growth, and like I said earlier, it's been growing at 68%. Now that would mean that we do 423 million, 507 million, 608 million, and in 2025, 729 million. Like I said, this is 20% revenue growth. I think this will be a lot higher. I think we will be pushing towards the 1 billion mark, but I've sandbagged it. Let's say they do profit margins of 45%. Now, they have been historically increasing them profit margins as we have grown, so they could increase. And in fact, I think their latest earnings, they did 47%, I think it is. So I have even sandbagged the profit margins as well on this. So let's say they do 45% profit margins. That means they're going to do 328 million in profit. That means they're going to be down at a 16p ratio. Now, like I said, for me, very cheap valuation. Let's say they trade at 32 times earnings in 2025. I think for a company that has a clean balance sheet, that has this, a revenue growth, the profit it's doing, I can't see a company like this trading down at these sort of valuations. But hey, we'll sandbag it. We'll go through, I'll sandbag the revenue growth, I'll sandbag the profit margin, I'll sandbag the valuation. Completely sandbagged every single number on here. Now that would actually put it down at $140. That will mean that from my current investment that I made last year, that I will have an 8 times return on that investment, which is pretty good going. Now, obviously that is a little bit short of a 10x return, but like I said, worst case scenario, this is worst case scenario, I still make an 8x return. And like I said, it doesn't even have to be to outperform the market. You don't need to have 10x returns. Quite a few 5x returns will see you easily outperform the stock market and your portfolio do well. And you could easily have 11 stocks and have one stock that does a 5x or one stock that does a 10x. And potentially, you could even potentially look at a portfolio where if you do really pick some amazing stocks and pick some good valuations, out of 11 stocks, you could potentially have one stock that 10x's and maybe one that has 5x return. If you have them 2 stocks out of 11 stocks, you are going to be laughing in the portfolio. So when I look at InMode, for example, and I sandbagged all these numbers here that I showed you, I can easily see this being an 8x return, and that's sandbagging. So when I actually put in my numbers that I think they'll do, I can easily see them being a 10x stock, and this is one of the stocks I see being one of my key drivers for the next kind of few years. It really does help me outperform the stock market portfolio, and I think it'll do quite well for me. And I thought I'd just make that video here today talking about not going in with crazy expectations, buying every stock and thinking every stock in your portfolio needs to be 10x return stock. You only need to have one out of basically every 11 that does well, and you'll be laughing in your portfolio. And as well as that, a little bit of an update on InMode and where potentially for me I see my next kind of 10x return stock coming from. Now obviously this is one that I've invested in for a year and a half now, so I do kind of want to see the results coming in. But I'll be honest with you, there's even a few stocks that I own in the portfolio at the moment that I'm buying right now nowadays, which I see being my next kind of ones after InMode that will lift the portfolio up as well. So yeah, I hope that was a little bit useful, a bit of an education video talking about that one, and also a little bit of an update on InMode, because I don't really talk about it that much, even though it's been my best performer really, and one of the stocks that I have really high hopes for in the next kind of next 5 years really. I don't really talk about it that much, and I thought I'd talk about it a little bit today anyway. But yeah, hope you enjoyed it anyway. If you could hit the like button, that'd be absolutely amazing. Have a good weekend, and I'll see you on Monday. Oh, and if you're on the Patreon, just to let you know, there's an exclusive video up on there, which is the UK portfolio review, so do go check that one out. And anyway, I'm going this time, and I'll catch you in a bit.